You got the central banks buying more gold than at any time ever. But this has been something that I've been saying to you since 2020 now, over and over and over and over again. Big guys always ahead of the curve. Well, there is no bigger guy than the central banks, not only in wealth, but in understanding and in foresight and in the playbook. I think it's very illuminating. And then, of course, you have the Dutch National Bank, who I've talked a lot about, and the revaluation accountant. He recently said this has been a political decision. If there is a financial crisis, the gold price will skyrocket, and official gold reserves can be used to underpin a new gold standard, according to the Dutch National Bank. Little crumbs that are laid at our feet. Well, you got the heads of central bank, one guy saying that it allows you to start over with a new gold standard, and another guy saying that it allows us to protect ourselves against the grid going down, in essence, and everything is digital. I mean, what more does a guy need to hear? And then when you see the central banks buying it at a level the world has never seen, and you see the exchanges all in unison suffer the same issue the day that the market goes down, it's like, are these tests? Are these warnings? Are these crumbs? I don't know. You tell me. This is where I try and take all of these things and put them together. My mind goes right to it. Hell yeah, this is a warning. This is a test. This is a omen. And listening to them say these things, how do you not think that? I think the old statement, if you don't hold it, I don't know that I really believe that, but there is something to be said for the elimination of any and all counterparty risk. Look what they're doing right now in Australia. They're talking about having to provide identification before you can use social media so that the police can monitor all the accounts in case someone says something bad, or in the UK, they'll throw you in jail. And even if you're in the United States, they'll try to extradition if you say something offensive to the crown. I mean, it's crazy. When I think about how little by little by little then all at once applies, I mean, censorship is a good example. In our life, that was never an issue. And then little bits of it kept creeping in and creeping in and creeping in. And now in Australia, they want to censor everything you say online, and they propose providing all sorts of identification before you can access an account and giving police access to it. I mean, it's like little by little these things happen, always in the name of security, and you give up some freedom in the name of security, you never get it back, something to that extent, just like 9/11 and taking your shoes off, unless you're TSA pre-check, you never get that back. Same thing is true here. I don't know. I think it is very concerning. And that is certainly another reason to distance yourself, if at all possible, from the matrix. There are very few ways left anymore. It's going to happen, and it'll wipe out the industry, and it will. I mean, you get a pension that says, I want to put $200 million in metals. I'm dead serious about it. What are you going to do? It's too big for us. No, of course not. And it's real. And I think those are the people that are waking up, because these are the people that are seeing very large swings in their asset values, in their net worth. And, the wealthy own assets. The wealthy have bank accounts, sure, but the wealthy own lots of assets. And the swings on the up have been fantastic. But I think when they see the swings on the down, they get very nervous. And if you take a practical look at things and you are actually honest with yourself, you look at the state of the world and where it could be, to only focus on a mainstream mantra is foolhardy. All it takes is for one of these people to have their eyes open to some of the real numbers and the real reporting that you do with all of your guests every day. Watch one of those videos and their whole, it's just a poof moment. And then they realize that they better do something. And as we grow nearer to such a pivotal moment, like the big BRICS meeting in October, and of course, the elephant in the room, the election in November, I think people are beginning to kind of reflect a little bit upon what the future looks like. So yeah, I think it will happen. I really do. And when you look at the situation, if you're just honest with yourself, it started in the UK. They tried to normalize, it started with us in 2019. We tried to normalize the balance sheet, and you get the reverse repo, or you get the repo market blow up and everything goes upside down, they pivot. And then you get the UK, they try to austerity and normalize their balance sheet, and their pensions almost blow up, they pivot. And then you get us raise rates to 5%, and the banks start blowing up, and now we're talking about pivoting. And you get the Japanese who do this and raise rates just a little bit and strengthen the yen just a little bit, and everything blows up and they pivot. This is a situation that has been created by messing with Mother Nature, by suppressing interest rates globally for so long, creating and incentivizing so much debt that the bill has to be paid. And you're beginning to see that there are very few outs. It's either succumb to inflation or let the system blow up. Continue to print and give in to inflation or let the system blow up. And that's what you're seeing in all these Western systems, that we're teetering. And I don't know, it just goes to show how fragile the whole ecosystem really is. And it's the wealthy who do well in an inflationary environment because their assets go up in value. So you see even the hint of deflation and the assets start to crumble. And so that's why they always choose inflation, because the wealthy get wealthier. Not that, they're losing purchasing power, but their assets go higher. But it's true. And then you talk about, being lied to real quick. You have right before Silicon Valley Bank failed, the Fed, Powell in front of Congress saying, that Powell said, nothing about the data suggests we've tightened too much, right? And then 2 days later, Silicon Valley Bank fails. And, you go back and you go all the way back to Bernanke saying the subprime crisis is contained, and boom, it blows up. And the way they said there is no inflation, okay, it's transitory, okay, fine, it's structural, okay, it's going away, but the numbers are all a bunch of lies. And when you talk about Silicon Valley Bank, the FDIC reported $600 billion in unrealized losses in the whole banking system. And the Fed always claims to be looking at all of the data, and they're supposed to be the key supervisors of the banking system. They would have had Silicon Valley's books. They would have had it all, and they didn't. And they jack up rates, and the whole system collapses. And here again, after you see one day drop, you have Jeremy Siegel, trotted out almost in tears, begging for a 150-point basis rate cut. Here again, to go, not only would that be the worst thing to do, because it would only exacerbate the unwinding of the carry trade, because it's if the yen goes higher or the interest rate goes higher or the interest rate received from U.S. Treasuries goes lower, well, the yen carry trade unwinds further. And I mean, they're not thinking this out, but here again, giving in to austerity, giving in to lowering rates in a weak dollar, and those aren't good things. And it's what they have always chosen, and this is what Trump wants to do too, and which kind of bothers me. He's advocating for a weaker dollar and for lower interest rates, and Vance is talking about, well, maybe the dollar shouldn't be the world reserve currency. Where did we hear that before? So I don't know that anyone's going to be able to pull us out of this, but what I do think is that we are destined for much higher inflation as a result of a lower interest rates. But what does that do to the debt? Who wants to buy our debt? And maybe this is why you see Judy Shelton come up and say, yeah, well, that's why you should issue 30-year treasuries in gold, which leads me to one last thing before I let you go. And that is a report. I don't know how many times when I see a report about gold in the Western media, it's always really bad. It's always, they frame it in a very bad way. And they'll always, even if it's a bullish topic, they will frame it in a bad light, right? And they won't speak to it in a flattering way. And they'll say, yeah, but. So let me see if I can find this here real quick. So the title of the article in Forbes magazine is, "It's hard to believe, but the world is beginning to lurch toward a gold-based monetary system." This is one of the first really gold positive articles I've read in a Western article ever. It's a very short one, so I'll read it real quick. The author says, it's hard to believe, but we're lurching towards a gold-based monetary system. This despite the fact that the historical gold standard is held in almost universal contempt by economists and financial officials. Contrary to numerous myths based on ignorance, the system worked. The U.S. was on a gold-based system for 180 years until the early 1970s. We never had inflation when the dollar's value was tied to the yellow metal, and the U.S. experienced the greatest long-term economic growth in human history. The signs of change are here. One is that the central banks in recent years have been purchasing gold at record levels. Buyers include China, India, and Russia, and a number of other nations, such as Poland. Adam Lipinski. These countries are reacting to growing doubts about the long-term value of the dollar, which in turn is a symptom of the perceived decline of the United States. And I want you to think of Judy Shelton right here, who would be, I think, the head of the Federal Reserve if Trump wins. She's a gold bug. She advocates for the gold standard and issuing 30-year treasuries backed or redeemable in gold. It says, India last year began experimenting with gold-based government bonds. Monetary expert Nathan Lewis, who co-authored our book, Inflation, What It Is, Why It Is Bad, and How to Fix It, observes, these would probably be very popular with investors worldwide. From the start of the floating currency era in 1971 to the present, a gold bond paying 4% would have outperformed every stock and bond market worldwide. Zimbabwe, which must hold the record for hyperinflation, recently announced the launch of a new fixed currency in gold. Deep skepticism is warranted that this government has the discipline to make such an arrangement work, but the move is a sign of things to come. So I don't know that I've ever heard an article that framed gold quite this way in a Western publication. But in essence, what they're advocating here for is a gold standard, gold bonds, and tying a system to a tether that installs confidence in a country and in a financial system that's lost confidence. So I thought it'd be kind of interesting, and I really caught my eye.